accounting for partnership firm, and now the partner is dying. Okay, so this is the accounting treatment for a partner who is no more in the partnership, died. Okay, so what we do, we prepare again a ledger account, which is in fact representing the executors of the deceased partner. Okay, and the capital balance of the deceased partner will be transferred to the executor's account. And then few more effects will be given over there. For example, partner or means death can happen anytime. So that partner can die anytime. So death will not wait till the close of the period. Okay, let the accounting year close and then the angel will come and the person will die. No. So the thing is that till the date of death, whatsoever the months are, we'll calculate profit for that period. Okay. Supposedly the person was alive, that partner was alive in that year for 4 months. So we'll work out profit for those 4 months first. And in those 4 months profit, we will calculate the profit which belongs to the deceased partner. Obviously, it's a logic, okay? So if the deceased partner's share is supposedly 3/5, 4 months profit will be calculated first, multiply 3/5, will get the share of deceased partner in those 4 months profits. So the executor's account will be credited with that share in profit of the deceased partner for that month. Then share in goodwill. Goodwill shall be calculated and the share of deceased partner will be credited in the executor's account. Obviously, interest on capital will be there. Drawings will be debited, or if there is current account for that deceased partner, that would be debited as well, or credited whatsoever. Or if there is interest on drawing, will be debited in the executor's account. All right. And if there is any other item that belongs to, in fact, the deceased partner appearing in the balance sheet in terms of like reserves, okay, that belongs to the owners will be given to that deceased partner's executors by giving credit. So the important thing over here is that we will look into the balance sheet. In the balance sheet, capital account is there, current account is there, which we know that belongs to the owners. And if there is undistributed profit appearing in the balance sheet with any name, reserves account supposedly, so that will be transferred to the deceased partner's executor's account first. Okay, because this is the right of that deceased partner. And then if finally, this is also important, if finally the executor's account is giving us credit balance, this is a loan liability for the entity. And if it is giving debit balance, yes, then it is something recoverable. There are chances that if that partner has withdrawn more than the credit side of the executor's account, already he or she has drawn more than the credit balance, then there would be obviously a debit balance appearing in that executor's T account, which would be recoverable from them then. Okay, so then that will become an asset and will be appearing in the balance sheet till the date the organization recovers. All right, so these are the tips for this module to remember. Thank you.